Hi, welcome to the Market Alert for Monday, the 26th of January 2014. And just looking at the chart there, you can see that sort of late afternoon, early evening, the market was undecided, didn't know what to do, and this caused, the lack of direction by the market caused us to have three consecutive losing trades there. The issue here is simply one of volatility dropping off. We've been wanting it to become a bit calmer, so we got more signals, but then it's become calm with no direction. However, the good news is that this is quite a rare event. This is not something you're going to see every day. It just turns up once in a while, so sometimes you just have to bite the bullet and have that losing day, in which this case, say we're going through all of the trades, was minus 28. We had a winning trade here at 1725 up to the psychological level of 17,800. We then had a potential sell, which was then overridden by the buy signal there, which obviously meant we had to switch. But that caused a losing trade there of 20 points. We had minus 15 in the next one, as we had to reverse once more, even though the market went down towards the psychological 17,750. And then, of course, the market reversed once more, again giving us another loss there of minus 13. So in total, minus 48 less the 20 there that we had from the first trade, which traded up to the psychological level. We can see that the market had been fairly quiet from the off, where we've had 100-point bars to start the markets. As soon as the session opens at 2:30, you can see here that we've had a lot shorter bars. So again, this is good news, because once we get direction from the markets, that's when we can start to amass the profits, which we did in December, if you go back and have a look at the trade results there. So just one of these anomalies that turns up now and again. The odd day where the market doesn't know whether it's Christmas or Easter and can't make its mind up until, of course, later on in the session we see the market then moving lower by 100 points. But unfortunately, we didn't get a signal because of this indecision. The market and the algorithm wanted to see if the market could sort its direction out, which it has done now. As you can see on the overnight, the market's got a lot more activity in there. We've been trading over a 50-point range on the overnight, which is quite a lot for the Dow as well there. So you can see the buying coming back in, the market trading above the psychological level of 17,550 there, but now stuck in this range, heading towards, of course, or getting ready for the European markets to kick off there. In the daily chart, a bit of a hodgepodge here as well, because the markets traded slightly, or for a few hours overnight, and then of course it's opened and moved low. You can see the market coming off the lows, so not a very good way to start this week, but the good thing is that the market's likely to fill the gap that we have there as well. So we'll see what happens. And again, you can see from the announcement of the European QE, this was, as I've mentioned before, the analogy of a drug user, that the highs need a lot more drugs as you get, or the body gets used to the effects, and this is the same with QE. You need to pump more in to get the same effect that you had in 2009 when it was all new. The market moved very sharply to the upside. Now it seems as if it's just a one-day event, which we can see here. No economic news for the US today, so a quiet day once more, unless there's anything of a geopolitical nature. I expect the market to be sort of sideways as well during today's session, but hopefully with a bit more volatility than we saw on Friday. And speaking of volatility, if we just have a look, you can see we're down at 13.32. Big drop off in the implied volatility from towards the 17% level. We've dropped off sharply. The historic volatility needs to come back below. That's the blue line, needs to come back below the yellow line for another major correction in this market. So again, expect the market to become fairly quiet at the moment, certainly for today. And speaking of volatility, there's one thing that I want to actually bring to your attention before we conclude today, and that's if we go back to the software and back to the daily chart, I just want to get you to change, if you've altered the settings in the active chart, PTP trade markup. This is currently being set to 25 points to account for the volatility that we've had in the market recently, and as this has calmed down, then what I want to do is to revert this back to the 20-point range that we have always used. So I'm going to adjust this to 20 and then click apply. This wouldn't have made any difference to Friday signals, by the way, so it wasn't because it was set higher on Friday that we had the losing trades. It's because it was stuck in a very tight and sideways day with no volatility at all, really. So we need to adjust and account for that drop off in the implied volatility down to 20 there, and then click apply, and then make sure that you save the workspace as well, so that that setting remains in there. Right, that's it for me for today. I will see you in tomorrow's edition of the Market Alert. As ever, thank you for your support, very much appreciated. And as ever, thanks for watching. See you in the next one.